level investor, property investor with something around 30 years experience, just under 100 properties, including commercial, retail and residential. Today's talk is all about property strategies, covering really why it's important to have a strategy, what strategies are available to you, and really deciding which one's going to work for you, and also what happens if you want to change your strategy. And really, I wanted to start off with saying, well, strategy is really a fancy word for a plan. And the older I've become, I've realised that having a plan is a really good idea. I just wish somebody had told me about it really earlier. So in terms of how I stumbled upon property, really, as a 19-year-old Asian female, I needed a property as part of an arranged marriage settlement. And that is a video for a different day. So in terms of strategies, why it's so important, and it is important really, because without a plan, I personally feel that you don't know where you're going. So in terms of my partner and I, the plan that we had in terms of our strategy, it was very, very simple. And one of the ways that we sort of crystallized it was when people used to ask us, what got you into property? How many have you got? How did you do it? We realized that possibly one of the greatest questions that we needed to ask ourselves is, why were we doing it? And that was really came down to two things. Was it one, did we want a revenue income from our property investments, or were we looking for a longer term capital payback in terms of the appreciation of the actual property itself? And I think once you've identified if it's either revenue you need or you're happy with a capital appreciation of your property, then everything becomes easier. However, I think it's very easy to fall into a bit of a black hole if you think property is without its challenges, depending on either or both of those strategies. Most people see the glamour of owning a property and think, wow, I'm a landlord and I'm making, whatever it might be per month, £300 per month after all your bills are paid, and proceed to live the life and spend that £300 every month without having any regard to that rainy day. And trust me, the rainy day comes more often than not, unless you have a plan for maintenance and a strategy for maintenance. The strategy we've always had has been one of revenue. So in terms of our property strategy, and basically what that means is that we're not looking to purchase a property and wait at the end of it and expect to sell it at a vastly increased margin. So identifying as part of our strategy was really, we followed a presenter called Sarah Beanie, and one of her mantras was, buy a property that you know, buy in an area that you know. And in future videos, you'll see that we've sort of ventured across the country and we've sort of honed down back into the areas that we know. So our first few properties, we decided to buy in locations that we could travel to and we could cater for any maintenance requirements, etc. And we did quite a bit of research, obviously, in terms of property, and some of the larger companies, very large organisations, have various models when they are opening stores. So, let me have a look. Domino's follow the Mosaic model. So it's basically a triangle, and they focus on sort of demographics of people, a university, and something else. So if that triangle is satisfied, they know that they will open a store in that sort of area. So we were very clear on sort of what was our sort of a triangle, what did it have to meet, and that really resulted in the types of property we wanted to buy. So, for example, if you're looking to buy and rent out student lets, then obviously one of the most obvious ones is near a student area. or a university. So that would be the criteria that you would narrow down. Our strategy wasn't student-lets. It was individuals who were employed, possibly single, and possibly sort of under 60, but over 25, and so that they'd sort of left university, appreciated a nicer place. And our strategy was really looking at that sort of person. And then the other strategy that we had was one that sort of meant reducing our maintenance costs and opportunities and time we spent on maintenance. So one of the ways that we did that was that we pitched our rent slightly below the market value, and we ensured that our property was of a standard that was above average in that market sector. And as a result of that, what we found is that we had tenants who would stay 3, 4, 5 years with us, rather than having a tenant who would stay 8 or 9 months or a year, and then we'd have the property empty for 2 months, and we'd have to do it up again. So in terms of your strategy, it sort of goes back to having a think about how much time and energy you do have to spend in terms of maintaining that property. So whilst it might appear that you're charging 5% less than everybody else, but your property is going to be let out for 24 months as opposed to 2 lots of 6 months. So thank you very much for watching. If you like the video, please give me a thumbs up and subscribe, and carry on sending me all the questions, and look out for our future videos. So I'll see you soon. Take care. Bye.